And this is Brad Matheny, and this is kind of an end of day wrap up of today's activity. Got a lot kind of going on this chart. You may remember this. This is a chart that I had drawn, a 1 hour chart of the E-mini S&P, highlighting the excess phase peak patterns and highlighting kind of what was going on here. Let me go through this and kind of explain what happened today and how I had kind of positioned myself. A lot of people are asking about my position, so I'll share a little bit with you. But remember, I'm not going to be sharing these in the public videos or free videos very often. It's, I'm here to try to help you, but I'm not in any way, shape, or form licensed to try to tell you what to do or how to do it or what have you. I'm a trader like you. I'm not a broker. I'm not a licensed certified financial planner. All of this is for education. I'm really just trying to help you learn to make better decisions, and I'll show you how I did. So knowing where we're at, let me come back over here to the SPY. Yeah, my squiggly chart. And, knowing that what I've been telling you is that we are moving into, in fact, I think I have a better one out over here. Nope. That's it. Or one of them. Anyway, this tells you what I've been highlighting is that we have a chance for a pop. I told you this morning and on Sunday, we have a chance for a little pop that could occur just on some odd news or volatility. Remember, right now we're trapped in this excess phase peak consolidation pattern right here. So the consolidation range, here's the consolidation high. Also, I can spell. And here is the consolidation low down here. And we're trapped in this range. So remember, I think that we're going to be trading sideways. I've highlighted this for you many times. And so today, as of actually last Friday, with this rollover in the markets, last Thursday, Friday, back over here, this I see as a little island top. In other words, it's kind of gapped up like right here. And if it fails to continue to move higher, then we're going to roll down, maybe setting up some new lows. So here's another little island top right here. And on Thursday, Friday, I started setting up some positions in short put positions. One was in SDS, a put trade, and the other was a call trade in SSO. So I will come over here, and not that one. I will come to this one. And so I ended up getting, let me check. Hold on. Oh, it was XLK and not S. These are what I did today. Get over here. Sorry, I've been driving around the last 4 hours. So I got into a XLF and SDS. I got into a put call at 47. Sorry, I got into a call on SDS at 23. So I got into a call last Thursday back over here at about 23, right as the market was trailing around, thinking that I was going to catch a move to the upside as the S&P collapsed. Then I also got into XLF, and I picked up a put trade on XLF at 47. So here's my 47 back over here. This was up near this high. Really a beautiful move today. Now, I pulled about half, a little over half in the XLF, excuse me, and half on the SDS today. So I've got half of the position. Both of those trades are up 65 and 70% right now. It's just a small little trade right now. I've got one XLF. I had 3, and I had 4 SDSs, and now I have 2. Total position is about $650. So now that's still my trade. That's still my expectation that we're going to roll downward into that lower consolidation, into the May area back here, just like I've been telling you. So I'm going to try to hold on to these and ride them down to probably this area here. And remember, this is really the roll that I think is going to happen into that May low back over here, potentially moving back up and out. So, I was ahead of the game. Like I tried to tell you back over here, I want to be ahead of the market moves, not behind the market moves. So knowing that we had this little island top, that we had some weakness, I positioned over the weekend, the Easter weekend, that we could get some kind of news breaking back downward. And I still believe we could get a little pop. So understand that at this point, we're down near the Fibonacci 50 and 618 level. Okay, so hypothetically, we could get a pop back up into this area before we roll back down. But now this is how I played the move today. So you're already aware that back over here, I pulled out down near these lows out of my my put position on XLF, and I pulled out of my call position on SDS. Still have a little bit left, so trying to let it run in case the market does break down. But when I was over here looking at this chart, it became very evident, I'm going to show it to you, that we had a big, beautiful excess phase peak pattern here in purple setting up, okay, run up to a peak, down into a pullback, flagging, breaking down into consolidation, breaking down to an ultimate low. Soon as we got down in this area, which was about 512 on the SPY, I bought 2 SPYs, 1-day call contracts. So they weren't going to expire today. I was going to hold them overnight into tomorrow. And it didn't really work out. The markets rolled downward. I took about a $240 loss and I got out. I was like, it still looks like an ultimate low. It still looks like it's a great opportunity to get into the trade. So now I was watching 5 minutes, and I'll come back in here on the 5-minute chart. And, so here we go. We roll down into that ultimate low. We roll down into this trade. I bought in this area here for 512 on the SPY, and it rolled up, and I got trapped on the phone again. And I looked at it and I thought, oh, great, I caught the bottom. And then it rolled down, and by the time it broke down here, I got out at about $245 loss. Really, it was an $1,100 position, a little over, and I got out with like 760, something like that, almost 800. So it's like, okay, I took my lump. That happens every now and then. But I still kept looking at it going, this is a clean, very clean excess phase top. This is really peak, pullback, flagging, breakdown into consolidation, breakdown into the ultimate low. You can see that this range between consolidation and this area here is almost exactly the low right down into this area. And again, we come over here, paste, and we've got the same basic range right here between the peak high and the flag low. So I'm going to change these colors so you can see them. I mean, it is just a beautiful setup. And so when the markets rolled down a little bit more and got down below 510 on the SPY, I'm like, you know what? This is too good to be true. This is really too good to be true. And I really wanted to try to see if I could catch this bottom early, knowing that we'd had this big sell-off on the SPY, come back over here, knowing that we had this big breakdown on the SPY. Yeah, that's right. And that we had gotten down to the 618 level. And again, knowing that we're going to likely roll, I mean, it's too early for the market to come all the way down into this area. It could happen, but based on my research, it's too early. This is going to roll potentially back up off of this deep low. In fact, I kind of expected it to roll up and take a heat on my XLF and SDS trade. I thought I'm going to deal with 2 or 3, 4 days of heat, and then I'm going to catch a big win to the downside, maybe leverage back into it. And I may actually leverage back into it depending on what happens over the next day or two. But based on this pattern right here, I got back in again at about 510, which is really, kind of like this area here. And what happened is I took a little heat, really wasn't sure what was going on, had to take off and hit the road about an hour and 20 minutes before the end of the day. Had to go over a mountainous pass, so I ended up having about a 30-minute blackout. And when I got the signal back on my cell phone to see what was going on, the S&P was in this rally mode, up into this area, was actually up in this area. And then by the time I got down the mountain and checked my phone again, we were about 10 minutes into the close, and we were shooting way up here. I mean, just really skyrocketing. And I had loaded up on, it wasn't a huge position. I loaded up on 2 SPY April 22nd call options at 510. And I loaded up on 2 SSO call options at 67. So I have SSO at 67, which is this is daily. Come down here to 5-minute. I picked up the options pretty much about an hour before the close. So let's come in here about an hour and 20 minutes before the close. Down in this area, if I remember right, it was just above. The market was just above 67, like 67.10, 67.08. And the reason I wanted to buy close to the money or in the money call options at this point is I wanted to materialize any gain I could as efficiently as possible and protect against any downside risk. Remember, these expire. The SSO trade expires on the 25th of April, and the SPY trade expires tomorrow. So I also picked up the SPY at 510. So I picked it up down here in this area. That was my strike price. I actually picked it up down in this area, if I remember right. And I rolled through this heat, got into the mountain right about here, and actually back over here. Didn't know what was going on back through here. And then by the time I looked at it, I was right here, a little positive. And by the time I looked at it again, I was right over here, and it ripped all the way upward. Now, I'm holding these, and in a way, I'm protecting myself in 2 separate manners. I have already locked in $800, $900 plus dollars. Well, let me take a look. Looking on my phone here. My profit today was $1,468 of all my positions, not just the one. And I currently have full positions on to the upside, totaling $1,850. That's the SSO and SPY. I have 2 SSO calls expiring April 25th. At 67 strike price, and I have 2 SPY 510 calls expiring April 22nd, and that's worth over $1,200 right now. Additionally, I have the puts, the downside protection, with 2 SDS call options at 23, which is up 67% or 65%, and I have 1 XLF at 47 put expiring May 16th. Which is up 70%. Now, my other positions are holding up. I'd like to get back into some gold, and I'm not complaining because I'm having good days, but gold is making a rip, as you can see again. It's really, just out of this world crazy what it's doing right now. Silver, I'm waiting for silver to do something. I mean, I almost want to kick it. but it's not doing it yet. But I'm loving the setup that I've got here. And again, you can kind of see the setup. I mean, it's the excess face peak is pretty clean. This is daily. Let's go down here to hourly. So, we get the same type of a setup. Let me make sure we got this right. Rolling, rolling, rolling into consolidation. So, where's our deep low? It's 2025. There's our deep low. Here we go. There's what I'm looking for. So here's our peak off of this low. We come up, we roll down, we flag, we break down into consolidation across here, and we break down into the ultimate low. Again, I got really lucky and I bought this low. Now we're going to see what happens tomorrow. And again, lucky, call it what you want. I took a highly probable trade outcome, took a loss on my first trade, and I'm sitting at about, well, let's see, I'm sitting at about 500 to 600 bucks in profit right now in my two open positions on top of the two short positions, which is setting at 260 bucks profit on top of my other trades. And now what I'm going to be looking for is this rally to come back up into. Now understand that we could off of this low, we've reached the ultimate low right here. So at this point, do we have more downside? Yeah, maybe. But what's likely going to happen is we're going to move into an inverted excess phase peak pattern coming up, probably flagging back in this somewhere in this middle of the consolidation range, and then flagging back up, maybe up into April 23rd, 24th, coming up into consolidation. And then again, because we have that low, we could end up seeing a rally. We could end up through consolidation seeing a spike up to that 540, 535 area high, reaching the ultimate high, rolling over and rolling down into the May low. Now, this rolling down into the May low, remember, guys, it's going to probably be something like this, flagging, breaking back down into consolidation, and breaking down into that ultimate low. Maybe not that low, but breaking down into consolidation, and then breaking down into that 500 low, something like this. And there's our consolidation. Here's our potential flag range, setting up like that. You would have a flag high low like this. You would have a consolidation range breakdown about like that. Try to make them equal. Not quite getting it yet, so it's got to be more like that. And maybe like that. And then we would have our breakdown into the ultimate low as maybe being a deep low 2 times this breakout range. Yeah, maybe down into this 490, 495, 5,000. So there you go. There's our A, B, C breakdown into consolidation, D consolidation, and E ultimate low. There's our pattern. So I'm playing this pattern up, and I will likely, because I have on my downward trades on my XLF, I have till May 16th, and on my SDS, I have till May 16th. So I can technically hold those as long as I want. Depending on what happens tomorrow and where I see this going, I may get out of them and just book my profits. I held them overnight tonight because I didn't want to go crazy and have a naked position. I wanted to protect myself to the downside and protect myself to the upside. And that's what I'm doing. But can you see how these excess phase peak patterns play out? Can you see how I came over here? Whoops. Over here. No, where is it? Right here. Yeah, this is it. Can you see how I was looking at this and how I saw this low? I mean, it came up. We had the consolidation. And remember, I teach you, look for the consolidation. You can see the consolidation. You can go back and probably find the flagging. And then you can come back and see where we're at the excess, the ultimate low. So right now I'm looking for the markets to try to pull back, maybe up into this area, which is the 50% area right over here, 53, 34, 35. And this is where I think we're going to probably find some resistance and then roll into that May low. And actually that doesn't work. But ideally, it would be something like this, pulling up, pulling up, pulling up, rolling into that resistance and moving back into the early May low. Still didn't draw it right, but you get the idea. So remember, guys, I'm just playing what's in front of me. And sometimes you have to be patient. Sometimes you have to wait. Sometimes, you know, if you don't know where you're at in the middle year, I just happened to catch this deep low, which was beautiful. And it played out very nicely and made me quite a bit of money today. And again, if you can just follow along, these happen on any interval, any time frame, and they're great trade triggers. So right now, I'm playing the upside. I'm still hedged to the downside. We'll see how the markets open up tomorrow. And my downside trades carry out until May 16th. So I have all the way out until about here to look to exit my downside trades. And I can reload into shorts anywhere over here, anywhere I want, because I have all that time. And right now I'm just trying to catch some profit to the upside. And then I'll reload into shorts back over here and try to catch that move down into early May. Okay, guys, that's it. Hope this helps. And I'll talk to you tomorrow.